Thanks. Alrighty, let me sure. So you guys got questions today. It's not YouTube, it is in Discord. Hopefully you can all hear me. Let me find my channel in the 85 channels that are on Bookmap here.
HT1 retested.
Get a rare view of my gorgeous face. Please let me know if you can hear me on Discord. You guys are in the channel.
Yep, you're good.
Good? Okay. All right, let me do the disclaimer here, and I'll be back in a minute. Sorry. I got this all I guess. What's going on here, Dan? Why am I getting back here feedback, whatever you call it? Dan? Bueller? All right, sorry about that, guys. It's been quite a morning. Sorry. Let's try this again. That was on YouTube.
Can you hear us?
Yeah, can you hear me?
Okay. Yeah. Yeah. Can you hear Dan? So we're anyway. You can turn off YouTube completely.
Yeah, I just X'd out of it. Sorry,
okay.
I forgot I even had it running. All right, I'll be back in a minute.
This disclosure statement deals with risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. And therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites or digital payments for educational purposes only should not be construed as express or implied promise or guarantee that you will profit and losses may be limited in any manner whatsoever. Users of the information accept full responsibility for the outcomes of their employment of all settled trader, LLC, and any associated companies, agents, management, owners, and customers regardless of authorization. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical accumulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account is likely to achieve or losses similar to those shown. In fact, there are frequently differences between hypothetical accumulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the method of harvesting. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program is trading losses material points which can also adversely affect actual trading results. Because these traits have not actually been estimated, the hypothetical results can be more compensated for the impact, if any, of certain business decision and liquidity. There are numerous factors related to the general implementation of a specific trading program which cannot be fully accounted for in simulated trading or in preparation of hypothetical performance results involved, which actual trading results.
The trigger movement of swap arms are not intended to verify triggers or to give specific trade recommendations. Also, the subset share trades and touch trades might take myself based on my open speaker time, correct secondary trading that runs out of the market. It's trading for sleep, you decide on the personal trade, you sort of risk, and there's no transfer account anymore. It's not the one after 2 hours on my trading accounts. Searching your next person searching the values that are some values in here, value that we did where you exact price to trades. When there's some price spreadsheet as well as price set trades where you might go longer short. The ability to copy the spreadsheet and your own values and use it from some prices that are in the jobs directly. So spreadsheet is not telling you what you're actually trading, and that's prices and stop prices. Short position for you trading person inside.
Alrighty, good morning. Markets are ripping as usual. So you can see we're basically at all-time highs in the ES drawing tool here. If you guys are on for Brent, he will spot Gammy's coming on at 10 o'clock Central, so he'll be on in an hour to go through the new trace indicator real time and take a look at it. I've had it for about a week, but I still don't really know what I'm doing with it. It looks really, really, really interesting, especially applying the stuff that I see with the SI indicator and the icebergs and stop runs with the options information. Should be an incredible edge. So he will be on here and at about 10 o'clock Central. All right, so yesterday we had a breakout of this little balance here after we had almost a failed breakout of that balance, and then it held, built more balance, and then the FOMC rate decision, and this entire area was a ton of sell ice, which is not working out really well for whoever's doing that. Again, you never know what the entity is doing. It could have been getting out of longs, whatever. Either way, that was not the best place to be selling. They could have been selling up here, obviously. So with markets, this was all this activity that happened in here. You know, the way markets usually react when it comes back to this, I'm fully expecting a reaction for anyone that was short in here, that is a longer term trader holding their breath, waiting for it to come back and the next wave up. So if we can pull back to this inflection zone, which was already from stuff that happened prior, you can see all the things that's happened here: directional conviction, selling tail, directional conviction, gap down, which is directional conviction, selling tail, directional conviction. Now this area that was resistance is support. So not only was it already support, now you have all this sell ice that was in here too that is probably begging to get out when it comes back. So this zone, if we do pull back into this zone, I would be trading double size longs if we get a bullish event. So I have my areas. So the way I trade, I have my important areas, which we'll go over on the webinar. And I look for the ultimate driver, the ultimate edge, in my opinion. These stop iceberg events, which there's about 40 of them here in ES that I was not even able to trade because I was trying to set up for this webinar. But I'll show you the trade that I missed. It is still working here if it comes back, but I've already missed, basically 15 points of this trade. So I probably won't put that one on. We'll see what happens here. The way I judge is if I would have already got out of some of these. So this was the last event that fired off. I would have taken a red rum and possibly a Izzy. We'll look at that. But, if the market goes to an area that I would have potentially gotten out, and this is one of them, these spot gamma levels, then I don't put the trade on when it comes back. So what I am going to do is delete this order that was working. So again, I was trying to get the stuff set up where I would have been long there, and I would have gotten out of some here if it was starting to struggle, which it is. You also have prior events here. I preach all the time, if you can avoid it, you don't want to be entering. So this is the zone drawing tool. The yellow line is where I would have entered this trade based on my rules for these volume events. If you can, you don't want to be entering in prior events, move them out of the prior events. In this case, you had no choice. I mean, you're going to have to move your order up 15 points to get away from all these prior events. So I just would have bitten the bullet and entered there. Again, I didn't even do it. So as of right now, this last event was bullish. So we'll see what happens here. On the flip side, NASDAQ, we did have some sell ice here. For me, there's nothing I can do off of this. So you can see this. There's a ton of sell ice here right after the open. This did prove to be a bullish event. So the way I judge these events is whether the market can push an ATR outside of it. And then if you're watching so many of these, that's the best way to judge whether I want to go long off the event or short off the event. Well, you can see here, this touched the ATR line. That's the blue line. Above and below. So for me, there's no trade off of this particular event. I wait for something new, and something new will be coming in here, I'm sure, shortly. Then we'll take trades off for that. So I've done nothing yet in any of these products. So waiting to see, if we do get a retest confirm here off of this event, I would take. There's other trading strategies I will take. We'll keep an eye on that, and then I do want to keep an eye on. So this is the new trace indicator. We're going to get, find out what he has to say about this, like this action right here. Obviously, simplicity wise, there's nothing simple about this, but the way they lay it out is supposed to be simple for traders. If it's in the blue, it's more of a support, and the red is not support, obviously, and you want to be. It's more the delta pressure we'll be selling, and we'll go over this. But there's these different looks. So again, I'm not going to even attempt to explain this. I do know this stuff over here. This is the zero date to expiration, these levels. So, this needs to hold, or whoever's playing the zero date to expiration game with the options are probably going to be in trouble. So we'll see what he has to say about that when we come back to it. Again, I don't really know how to use that yet. So we'll talk when he comes on. I do know how to pretty much basic sense read this hero indicator. So this is the options flow in a different view. You can see here. So he talks about a billion notional. You can see here on the right being a significant amount of options where the dealers have to turn around and hedge themselves in the future. So there hasn't really been that big of a move here. So I'm not really getting to see anything on that. And the other important one is Mag 7. You can see this thing's sitting at its highs. So this is the Mag 7 options flow. Markets are not going to sell off much if this thing is sitting at the highs. So kind of a mixed signal between these two. And again, I eyeball this. It helps me stay in trades. We have trading strategies coming on this as far as like of my trading strategies, but I don't have any specific trading strategies yet that I trade off the hero. But I like to keep an eye on it, and we will keep an eye on it, especially with the trace when Brent gets out here at 10 o'clock Central. All right, so let's just see where we're at in the market profile stuff. If you guys got questions as we go along, put them in the Discord today, not in YouTube, because I'm not going to see YouTube. You can hear everyone entering the Discord, and I don't know how to mute it, so I'll have to put up with that for now. All right, so you can see, like, ES is gapped up, monstrous move here, closed here, gap out of this market profile composite, and we're up here. So this is all-time highs. There's no composites. There's nothing to do here. So Ludwig level-wise, this is the second strongest thing I've ever used in my trading. Talk about them all the time. The red is resistance. The blue is support. It's formed new lugs, we call them, instead of saying Ludwig level 85 times in the webinar. I just call them lugs. You can come up with a thesis based on these as well. So we come up with a thesis based on what the market's doing around market profile composites, what's doing around the bar charts that we were looking at a second ago. Of course, I lost. I just want to pull this back up so we can look at it. My areas on here. I can't find that chart as usual. What I'm going to do is I'll find the chart and it'll be behind my main screen. But for some reason, I can't ever find it. Thinkorswim is not good. There it is. Just like I said. So anyway, I come up with the thesis based on what's going on with the structure and the bar charts. It's just basically we're looking. Markets are usually in two states. They're balancing, or they're trending, balancing, or they're trending, balancing, or they're trending, right? That's basically what you need to know on the bar charts. But I come up with thesis based on how the markets are reacting to balance areas, whether they're breaking out, whether they're failing after a breakout, whether they're coming back to balance, so on and so forth. So I come up with a thesis based on that. I come up with a thesis based on market profile composite, and I come up with a thesis based on Ludwig levels. And then obviously you can throw in spot gamma. This guy keeps talking over me. The spot gamma, obviously, you come up with the thesis to do with the options activity, and we'll talk more about that, like I said, when Brent gets on. So anyway, with the Ludwig levels, when it forms new Ludwig lugs to the upside, if the market is truly bullish, it should hold prior red and the current directional yellow, and then you expect red. If it doesn't, it can't, and this is kind of struggling here, then you expect blue. So that's just a thesis, right? I trade, I'm a day trader. I trade long and short, but when I get thesis in the direction of the volume events coming in, then I trade bigger, right? So right now, obviously, the markets are at all-time highs. It is in this inflection zone. So if I did get a short here, I would take the short. I would wait though. So this has been sitting in the zone where this failed that led to this huge move down, right? So a different scenario now where you're breaking out of all this balance for this, couple of weeks of balance. It's far enough away from there. I'm not afraid to short it aggressively if I get a bearish event, but it's been sitting in the zone for over an hour now, or close to an hour. So if I do get a bearish event, I will wait for ATR retest confirmed to take a short. If I get an event that's a short event. So this is what I'm doing. I don't have anything on right now, right? I know this is an important area. One of my important areas is to wait for a volume, which is the driver of my trading, right? So the SI stop iceberg events. And again, this last event was bullish, and I'll show you quickly the trade I did miss. So this is one of our strategies, red rum. So there was a double whammy. There were sell stops into the waiting ends buys down here. So I just showed you. I'll show you again. But we have a trading strategy. When that happens in the red ribbon, we call this algo guy. So just an exponential moving average. Ribbons. These are different time periods. This is longer, this is shorter time periods. But when the blue is above the red, that's a bullish scenario. So we have a trade for when there's a volume event in the red. So that's the trade that I missed at the time. And that was the double whammy right here. This is one of my 6 distinct setups that I trade. Again, the sell stops. Let me turn this off. You can see them clearly. Sell stops into the waiting end of bias, and there's been bias this entire way down, right? So somebody's stepping out here. This is probably all the sell ice that was wrong. Again, you're never going to know what entities, the bigger entities, are doing. As far as you can see what they're doing, that's the whole point of what we're watching here. But you never know: are they exiting positions? Are they hedging positions? Are they initiating positions? You don't know, and it doesn't matter. All you need to know is this is an area of activity. Somebody's selling, somebody's buying. Somebody's going to be right, somebody's going to be wrong. And look for the moves out of these areas to take advantage of them. That's all I'm doing, right? All right, so this is kind of sucks that I never got this long one. Let's head over to crude real quick because that's starting to annoy me because it just keeps going higher and I should be long. All right, so crude looks pretty bullish as far as thesis as well. You can see here. So we had that balance area, tried to break out, came back, held where it should have if it was going to remain bullish. This is the high volume node of this. And then currently you have this balance area, which it tried to break out of, and we're back to the top of it. So this is an Izzy long I could be taking right now. Here's my inflection zone. This is an area where it rejected twice yesterday, and then today, now it's, again, something that was resistance is now support. So I can take an Izzy long right now. Of course, I'm missing that too. This is the zone drawing tool. When I start talking about it, it starts running off the page as usual. So I could put on 9. I don't usually chase my orders, but this is already like kind of, it's hysterical to me that I start talking about a market, it just runs off the page. All right, I'm gonna I chased it up 9 ticks. I don't usually do that, but again, it's already hit this and kind of hung around here. I don't want to miss this trade as well, like I missed the ES. So I paid up 9 ticks. I should have been in at 62 or 61 at the time. That's what this line is. So this is the Scott zone drawing tool. You guys click on the document in the, we'll go over some of these things that I use in my trading. That is this here. Click on that. That is the zone drawing tool, right? So now you got 2 different options here. This was in beta since like March. It's finally, we've got basic and pro. So you can get the basic, which just draws the zones for you. Pro shows you all the entries. The entry prices, the ATR. The basics had ATR too, but the pro shows you the entry prices. And you can put in your capital, how much you want to risk per trade, and then it'll spit out exactly the quantity you need to be trading for that risk amount. So everything's done for you. This was all born from the trading spreadsheet that I've used for years, and members of my trade room still have access to this. So what you see on the pro version of the drawing tool is this spreadsheet just put on the heat map of a Bookmap, right? So you enter in your zone, you enter in your ATR, and it tells you for the position trading, where you go long, where you go short. I don't have the current zone in there, so don't pay attention to these prices right now. And then we have another strategy called the ATR reversion strategy, where the markets will retest this zone. So this is a perfect example. Excuse me. Where this is these dotted lines, again, this is part of the pro version. 1 ATR came back to the zone. This was actually an A+. 1 ATR. I have this working with a trading firm right now where it just fires off automatically. When your ATR entries are in a prior event, those are A+. That is because, again, these are traders that are caught. It bounces off there and comes back to this zone. So that's a different strategy. I don't take these or those trades on these webinars because they're just too labor intensive. That's why it's running as an algo at a trading firm right now, because I just can't keep up with them on the webinars. So we take position trading trades on these webinars. So the position trading trade I just took was the inflection zone trade. I think there was something else here I could have taken too. Let's just take a quick peek here. Not quite a pick, right? So profiles encouraged. We nicknamed it pick. If it came back here, again, one of my important areas. If I got a volume event there, I can take it long potentially if the event turns bullish. Nothing with the Ludwig levels right now. If it got down to the blue log, I can take there's different trades for that. We'll go over that if that happens. So right now I'm basically just long Izzy, and I should be long actually a couple other trades here too. So when I'm saying trades, meaning strategies, I just talked about this, but this is this, right? So one I just took was inflection zone trade. Like fade trades in prior inflection zones. That's what I took long in crude there. I missed this one, algo guy. I'm sorry, I missed red rum. It's the same trade I missed in the S too, where you get the volume event in the red ribbon. So I should have been long that. Might as well just chase that one up too. Why not? Let's put that on. Red rum, red rum. And again, I should be getting in here. I'm just hopping in these trades. I don't usually chase, but and then the other ones I should be long are bark and lick. So a bark is all it is because I want to take advantage of these volume events no matter where they're at, right? I have certain areas that I look for volume events, but I know the edge is inherent in this volume event. So we have a pattern for that I will take. It's called the ATR, retest, confirm. Blind ATR, retest, confirm. Blind meaning I will take these anywhere. It doesn't have to be in an important area that, like I've been talking about, right? So because I know the edge is inherent in this, and I did a experiment. This is like 3 years ago now for my trade room to show for the month of December, all I did was take blind ATR retest confirms off of any volume event. And I wasn't even using, I use Algo Guy as my filter for that now, but I didn't even use it then. And it was still profitable. Made like, I was trading, I think at the time, like 2 lots, 2 big ones. And I think it was up like 13 grand for the month, literally just taking blind ATR retest confirms. So my point is this stuff in its own right is the edge. When you can apply this stuff in important areas, you have even a better edge. So that's why I tell traders all the time, these trading strategies are my important areas, right? So all these things I've been talking about are my important areas. You may have your own important areas that you deem important, and that's perfectly fine. It's not for me to say if something that you're using is important or not. What I'm saying is if you wait and get these volume events in your areas that prove your thesis right or your area correct, what you think is going to happen, then you have the ultimate edge. So if you are a profitable trader already, and you're not using this information, well, you don't have all the information. But if you start to use this, I can promise you that your edge is going to be even better, and you're going to do a lot better knowing when this stuff occurs, right? Because this is what drives markets. I was going back and forth with some clown on Facebook yesterday that was saying that price is the best edge or whatever, and I tried to explain to him, and he obviously wasn't getting it, that price doesn't move on its own. You need volume to move markets, right? So the number one thing that moves markets is volume. It's not price. Price can't move without volume. That's the first thing. So anyway, that's why my main focus, my edge, is volume, right? So, and how to trade it. So we look at volume in this way. We look at volume with the relative volume stuff. Speaking of which, let's take a look. I have not looked today at what was going on there. So it's not bad. Like it's been, obviously, it's been close to 200% all morning. I mean, or at least 100%, meaning. So this relative volume chart I'm using is showing me the exact 5-minute period, the last 30 days, whether it's above average or not. And it will highlight yellow when it gets 200% or more, right? So that's very important information. You can see this all night long, this thing has been huge relative volume, right? So it just means the bigger money's playing, and usually the day after the Fed meets or announces rates, that's when the bigger money starts to do their business. So today should be a very interesting day as we rip to new highs. Again, guys, if you have questions, put them in the Discord room because I'm not going to see them on YouTube. I don't even have YouTube up today. All right. So I'm long crude. I didn't get on the bark and lick. I'm not going to chase those, but I should have those on as well. So I'm long red rum and Izzy. I didn't get on bark and lick, but you can see the liquidity, the heavy resting liquidity up here. So for those of you that don't know what that is, this is just showing you the order book in a different way on the heat map. So when markets have these orders that are sitting in here, the longer they've been sitting in here, the more important they are, and the more these guys want to get filled. Meaning, say if OPEC comes out right now and cuts production, this market's going to rip through all these orders. Well, they're willing. It's been in here forever. They're willing to get filled. That means they want to get filled. So you don't look at this and say, "Oh, well, look at all the sell orders up here. I want to be short." It's the exact opposite. This is like a magnet for orders, where they want to get filled, and the big money will push the market to their orders. It doesn't mean it's going to happen right this minute. It probably will, right? It's already heading up there. But there's times, like there was a time last week we saw there was like events like this in ES, and there was a bunch of liquidity right above it, and I still put on the shorts because my theory is, it's not a theory, I watch it all the time, that it doesn't have to hit that liquidity right then and there. It's got to it could move, 30 points, 50 points lower, then come back and hit it. And it's exactly what happened that day. It dropped 50 points. It came back by the end of the day and tagged all the liquidity. So it's important to know where it is. And this is just, I used to play this exact game when I was a big scalper, right? I used to load up the order book with offers. Back then you could put 1,000 lots in the ES, and there was thousands up and down the book. And so if I were doing it today, it would look just like this, right? Then I would start to accumulate longs, accumulate. I'm buying a little bit, see how the market reacts. And then I would get to a point where the market I can tell there was no sellers, and I would just step on the gas. Remember, my sell orders are sitting up here. And then the flurry of orders would cause other buyers to jump on my coattails, and it would push the orders right into the order book, right into my resting orders, and then I'd be out of the trade. So that's the game I played day in and day out, every single day for years, right? So, and then that disappeared when the algos took over. I couldn't manipulate the market like that anymore. And back then spoofing was legal. Like, I played all those games. I was like one of the most hated traders on the street, especially in Chicago. Even in my own trading firm, I like to tell the story the one time where I was the number one trader in my firm, right? And the way I complain about the manipulation, especially in crude nowadays, they're just flipping it back and forth. I call it getting algoed. Well, I was the algo back then by hand, right? So the one time I was walking through my trading firm to go to the restroom, I heard this guy in his office screaming at me, like screaming my name. He's like, "F you, Pulcini, blah, blah, blah." And I opened his door. I'm like, "Did I do something wrong?" And he's like, "Oh, sorry. I thought that was you in the market." So that was my own trading firm. So you could imagine how much I was hated, because I would just play these games all day long with the order book. Can't do it anymore. That's why I try to tell you guys. I get so many emails about trying to scalp off this dome. Good luck. Trust me, if I can scalp, I would be scalping to this day, making dollars like I did back then. It all went away. I had to come up with a new way of trading. Again, you guys all know my story. I was out of the business for I had to get out of the business in 2013, and then 2017, I was introduced to Bookmap through Dr. Brent Steenberger, who wrote the book Enhancing Trader Performance, that he put me in. He sat behind me for a year. Anyway, he called me and told me about Bookmap. He said, "You want to check this out?" It reminds me of how, because he sat behind me for a year to write the book, to put me in his book, asked me if he can do it. I said, "Sure." And he said, "It reminds me of how he used to view the markets." So the minute I saw Bookmap, I knew I was back as a trader, just to be able to see the markets in this way. And that was before Stop Iceberg stuff. So, this is, again, if you're using this information, you just don't have all the information, period. All right, just hold on something there. What was that? I'm really glad I missed this long in ES. Thank goodness. Who wants a 40-point straight trade? What did I just throw on there? Hold on. Let's see what we got going. Like I filled on gold. I should not have a gold trade on. Hold on, I got to get out of these. Sorry, guys. Give me a second here. I don't even remember having that working. I had a lot going on this morning, though, trying to get set up for this stuff with Brent and stuff. So, all right. Didn't mean to put those on. Got out. And guys, if you ever make a mistake, guys and girls, just get out of the position. I can't tell you how many. It's probably over $1 million that I've lost in my career. Like, made a mistake and then hoping it comes back, and then watching it just nosedive on me. So just, if you make a mistake, get out of the trade. All right. So again, I missed this long. You can hear these tick extremes. So let's just take a look at what's driving all of this. There's your hero, first and foremost. This is definitely helping the trade. These options dealers obviously are not the only player in town. So when this is going up, that means the general public or whoever are buying options from the options dealers. So the dealers are short options. The dealers have to turn around and buy futures, right, to hedge themselves. So that's what this is showing you. I got to turn this up too, because I'm not hearing any of these events. I got to listen to annoying tick extreme. We'll look at that here in a second. And you can see Mag 7's going to its highs too. So this is, one of the drivers of this move. And then let's take a look at this. So you can see this is the NYSE tick here. Keeps hitting in the, if you starting to get over 1,000, either way, it's program buying or selling most of the time, especially if it keeps tagging it. And that's what's happening here. And this NYSE. I don't know what's going on with this now because some sucks. I don't know what happened to my tick. What is going on with this thing? All right, either way, that's extreme. You can see Nasdaq sitting extreme. We're also almost trend up on the day on the ADD, advanced decline. So you want to be very careful. It's not quite there yet, and it's actually pulling back a little bit. So this is a great example of how the Mag 7 is driving this move, right? So the overall market, this is the whole universe of stocks, is kind of moving lower. But we're going to highs because this Mag 7, the highest weighted stocks in the market are, it's at its highs. So that's what's driving this move here. I really want to get this back. I don't know what happened here. Hey, there it is. Not sure how I did that. Anyway, you can see here, this keeps hitting extremes. That's what that ring is, because we have a new trade too on these trading strategies called TikTok, where, because almost all of my trading strategies, I wait for the ATR move outside of the zone. We'll go over that to get in the trade. Well, this specific one is literally, it's an auto fade, meaning you hear a tick extreme as you hear the annoying ringing in the background. The minute you get a volume event, you jump in the trade, right? So this may be one here. Again, I had my volume turned down. Let's see what's going on here. So this is one, but I wouldn't take a TikTok fade on buy ice, right? If this was sell ice or buy stops, I would take a TikTok short. I'm not going to do it off of this event right now, but this is an event. Let's see where we're at. Let's see what we can do here. I don't think there's anything to short up here. This is right on the edge of this inflection zone, right? I would take an Izzy short, but I want to see ATR retest confirm off of this event. So I have two ways of entering this. Variation 1 or variation 2 is if the market's sitting in an inflection zone. So inflection zones are meant to be fade trades, right? So there's another one up here. I'll still fade this, which it feels not very good, obviously, but I want to see ATR retest confirm just because it's been sitting in the zone. The best Izzies are when you get these huge directional moves right into the volume event. So So again, I don't do anything off of this yet. From watching thousands of these things over the last 8 years, and this is what this is showing you on the zone drawing tool. I demand the market can push out an ATR to show me whether it's a bullish event or a bearish event. So I don't know what I'm doing with this yet. This is what I was explaining. With all my trading strategies, demand that before I do anything with the trade, except for the TikTok. So I don't know what I'm doing. If this turns out to be a bullish event, then I can put on barks and licks, and you see there's more liquidity up here. I mean, this market is just out of hand. Nonsensical as usual. I mean, it's not nonsensical. It is what it is. But this is why you can get your head handed to you if you're trading fundamentally, right? If you're like, okay, this is overdone. This makes no sense. Well, guess what? The market thinks it makes sense, and that's why you trade what you see, not what you think. But we will see what happens with that event. There's nothing on the short side there for me unless it does an ATR retest. We'll cover that. And then we had, looks like I missed an event here in NASDAQ. These markets are just going crazy. All right, so this is this is not a bearish event, obviously, because it pushed the ATR out. But if I get another event here, I will definitely take an Izzy. I'll take it first move out of the zone, right? So if we get a volume event, as this moves higher and it fades, I would take it. These are the best Izzies. This market closed here, gap through that one, through that one, and into this one. These are the best trades to take, and it's usually the scariest, right? It's going to feel absolutely terrible to short this if I get an event. It's not happening yet. I'm just preparing for if it does. It's going to feel terrible. You feel like you're going to get your head ripped off, right? But if the market's truly bullish, like it is right now, you're not going to be seeing bearish events, right? So nothing for me to do off of this yet either. It didn't, as far as the long. You push the ATR out to make that a long event. This is one of my 6 distinct setups. This is called a stop and hold, right? So there's nothing for me to do as far as barks or licks. I need to see the retest, and it's at least 70% from my studies of watching this thing, about 1 million events, that it's going to come back to the zone, right? We have a trade for that called the reversion trade, and you can see that. I believe that was part of the Zone Jarring Tool Pro 2. This was the what was this one? So this dotted line here are the different reversions that we take. This one was that's the 3 ATR, right? So the 3, the 2 got run over. Well, the 2 hasn't lost yet, but the 2 entry was there. Here's your stop for the 2. That's the dash dotted. Then the 3 just got filled if you take the 3. Now the odds of this coming back to this event it's probably 80% from all the ones that I've watched, right? That's why we have a trade for it. So I'm not putting these trades on. I'm just telling you we have a trade for that, and that's part of the Zone Jarring tool. So anyway, if it does come back, then I'm going to put on longs in NASDAQ, bark and lick. If I do get a short set up here, I could take a short. Is he short? Let's see where we are in. Sorry, guys, I'm a little under the weather as well. There's nothing here in market profile, obviously, and we just blew through the lugs. So we talk about thesis, obviously breaking out of that balance. We broke out of this, 4 new lugs. So if this holds directional yellow and prior red, you expect next red. So this is all looking very bullish right now, right? So I have no problem going long. If that comes back, I wouldn't take double size longs just because this is all-time highs. But there's nothing wrong with it. I just can't. I'm not going to personally take double size longs at all-time highs because you're always waiting for that pullback. But if we get this, I will put out longs there. I got some ECB stuff. And then so this is almost going to be a short setup in ES, right? So again, if the markets are truly bullish, these volume events should not be failing. It hasn't failed yet. It's got to touch that ATR line. You can see the ATR right now is about 7, close to 7. It's a 5-minute. Well, there's ATR. That's just showing you that the market's rotating about 7 points every 5 minutes, right? And then this is a pretty heightened ATR for ES. It's usually around like 3 or 4. So I still don't know what I'm doing with this event. Bookmap Bob. So with the drawing tool, it also announces for you this is obviously helpful if you're watching multiple markets, where I'll know if this confirms to the upside or downside when it touches this ATR line. So Bookmap Bob will let me know on that. Now we're just in wait and see mode. I'm still long crude. Now it's starting to come back to the zone. It already did it once, but it may come back. It may not. I don't know. I'm in the trade. So when I put on my trades, I demand, if I'm going to be wrong on this trade, I don't let these algos, you see this jack in here. This is one house, by the way. They're in here all the time, and he'll turn it off and it goes black and then he puts them back on. So I'm not saying they're the only person with algos in here, but there's one main algo, right? So when nothing's going on, this is when they start to mess with you and cause traders to panic out of positions because they can't handle the rotations, right? So not saying this isn't going to come back and stop me out, but I demand in my trading, if I'm going to get stopped out of this trade, I'm not going to do it in the middle of nowhere. It's got to come all the way back. The ATR plus, got to get through the volume event and then push another ATR out of here. Then I say, Uncle, I'm out of the trade. And I can hear the groans in the crowd on the webinar. Oh, what? When I put a crude trade on, I like to risk 10 ticks to make 30. Great. I'm telling you, over the long run, it's not that I like risking that much. It's the best way to avoid the rulers of the market, the algos, right? So you can trade these however you want, but I'm just telling you, in the long run, over a series of trades, you're much better off forcing these markets to get the ATR out of the zone, so you're not getting algo to death. Right? If you want to play that game, have fun. It's not fun. Take it from me. All right, let's see what happened to the natural gas number. So I haven't even heard half the stuff that's firing off. Again, I hear Bookmap Bob talking, so the way you want this in text mode too, so you come over here, hit file, alerts, and this comes up so you can see what you missed. So that ES short did validate right now. Bookmap Bob announced it. I didn't hear it. We had some Russell stuff too, natural gas. So excuse me. So this event is now bearish. So I'm not taking, this wasn't right at the top of this Izzy zone, but I've already explained, this is variation number 2, right? For this trading strategy, right here, Izzy. Inflection zone trade. Take fade trades with moves into prior inflection zones. Variation number 2. This also applies to a situation where the market is accepting in the zone, building balance. So meaning I need an ATR retest confirm for that. That's my rule, right? So this has been sitting in the zone for an hour, over an hour, right? So I'll still take the Izzy short, but I'm not taking it aggressively. Most Izzy's I will take first move out of here because they're such important areas. I don't wait for the retest because I may miss the trade. In this instance, I'm waiting for the retest, especially in this market environment. If this dies, fine, it can die without me. If it goes ATR retest, it's already hit the ATR, so this is a short setup. We'll take the short. Is he short? What's going on, Mr. Russell, as we call it? All right, so we had back-to-back bias up here, and this is already a bearish event. So you can see here, right? You had 200, 250, 260, right? So you're looking at over 700 ICE. I would probably combine these two all of these, because this is very likely the same house, and you can usually see it on the on chart, and you can see it here with this white line. So this is the same house. So most of the stuff we do is black and white. Some of the stuff's subjective as far as, hey, do I combine these zones? Should I trade this zone independently? I would just combine them, especially if I'm going to potentially go short. I don't want to be trying to split hairs here, so I'm going to just combine these 3. I'm just going to X out of this one. You can see you can move this thing up and down. I'm just going to make this one area. Easy bookmap up. There you go. All right. So that's step 1. There's my zone. You can see this white line. This was all one house, right? That's not surprising. They just came in out of nowhere. It's not working out for them very well right now. Again, I don't know what they're doing. They could have been hedging, whatever, but I do know they could have bought it at a better price, right? So whoever that is, you just have to assume they're initiating positions. And then when it comes back there, they're like, let me out. And then that's what the ATR retest is. So let's see if I missed a trade here. This is an inflection zone, but I'm going to wait for ATR retest for this one too, because this thing has been, you see it's struggling in here though. This was yesterday. Huge selling tail. Today, directional conviction, another selling tail. So this zone is still holding, right? That was the bottom of this. That was a gap up. Directional conviction out here. So prior stuff. The farther it goes back, the more things that happened in the past, right? So anyway, volume event in an important area, ATR retest confirm. Because it's been sitting in here, I will take it short and Russell as well if this retests the zone. If it doesn't, for my rules, I just miss the trade. See if we got anything in market profile composite. Magical lugs work again. Surprise, surprise. So these are some of the best lugs. This was overnight, but if you watch that webinar, it's all over. It's in the YouTube chat. I mean, it's in the Discord. Scroll up. I've posted this in the pinned messages. The webinar I did with her was about 3 years ago now, 3.5 years ago. Anyway, her, before she even learned about Bookmap or anything, the way she would trade these, some of her best setups are when it gets above the big red, she calls it, the resistance, and it can't form new lugs like we saw in those other markets, and gets back below. That usually signifies a whopping move the other way, and that's exactly what happened overnight here. But this is now, so let's see where we're at here. So nothing to do here for me. Actually, I probably could add a market profile composite here. Let's take a peek. We got Brent coming on in about 14 minutes. Yeah, see, when you switch months, I lose all my drawings. So this was actually probably an area that I missed. Let's see. So these are just days, value areas, meaning 70% of the trade. Like this was a single day. That's why I don't have it drawn blue, right? When they merge, they overlap. I will merge them and then draw their very powerful areas. And this is the value area, aka where 70% of the trade occurred in that for those days. So you can see this is actually moving out of here right now. So this is telling you something thesis-wise. I talked earlier about coming up with a thesis based on market profile composites. When market profile, or when markets get in these composites, they should go to the other side. That's the tendency. If it doesn't, then this probably fell right at the point of control. meaning the most traded price. If it doesn't and it gets back out, that's telling you something. So things may be changing here in the equities. We'll see. But there's not an event right here, so there's nothing for me to do. I'm well aware this is an important area. So break this up. So that's today's trade. But I need the volume event to trade it. So there's nothing right there. There was something higher, but that was not the area. So if you guys are trading the reversion trade in my trade room, this is actually an A plus volume event. This should have fired off at the trading firm too. I just can't. I watched it on my laptop, but I can't pull it up right now. Anyway, here's your 2 ATR. As long as the stop is through the prior event, you can take that. That's an A plus reversion. So hopefully that trading firm took that. It's just as long as you don't have the main disqualifier of heavy relative volume. So I would not take that here. You see this? So if you see heavy relative volume, I would not be taking reversion trades. So that's our disqualifier. Again, I'm not going to get into it. I teach it, show it all in my trade room, but this is not. If this was just regular volume, yes, this would be an A plus reversion back to this event. But with that heavy relative volume, you don't want to be touching that. All right. So again, this was my decision not to take this Izzy aggressively. I could already had 10 points in it. It's still probably going to come back to the zone. Speaking coming back to the zone, what did I say? It was about 80% going to happen. Here's your NASDAQ, retest of the zone, right? So again, it is uncanny how often these things come back to these zones. You would be amazed in my trade room. Guys are like, I took 15 reversion trades today and 13 of them won. It happens nonstop, right? So the question is, and I keep saying I'm not going to talk about the reversion trade, and I keep talking about the reversion trade. Some days the ones are dynamite, right? Some days the one get run over and the twos work. Some days the ones and twos blow out and the threes are working. Like this one, the 2 and the 3 work. So the point is, if you're going to pick one of these, and this, I'm going to try to stop talking about it, you got to take as many as you can to utilize the edge, right? If you're just sporadically taking them, you're going to get sporadic results. So if you're going to take it, you take every one. The ones I like to take are the back, like the 2 or more, and then take the backdoor one coming back. Those are, I like that the best, when I'm doing them by hand. So that's the reversion trade. Here you go. What did I say I was going to do on an ATR retest confirm? I was going to take a long. So I'm going to take the Bark and Lick long. So I got well outside of an ATR, came back. Here's your retest, the exact price point for the retest that we talk about. I'm going to go long NASDAQ, 2012.75, and I could put on 3 based on my risk. But hold on, NASDAQ, don't be. It's like I always joke that there's a camera in my office, but it's like it literally I start talking about a market and it just rips off the page. Right? I gotta get in here. Get here. That's Bark, and then I'm going to put on Lick. So if that comes back, I'll put it on. It's at 11. 111. All right, those are working. Other than that, are there any other things I can put on long here as far as strategies? Yeah, I mean, this is an Izzy, right? This was the zone. Market moved out of the zone, back into the zone. I'll put out an Izzy as well, Izzy long. This to me, this feels terrible. I hate chasing markets up like this. After this kind of move, you feel like it's going to pull back at any time, but I don't know what's going to happen. So I have my trading strategies. I know these are the ultimate edge with these volume events. I just put the trade on. I don't know what's going to happen next. If there's anything you're going to learn, you should be taking from the webinars is you don't know what's going to happen next. Just trade the events with the rules. Right, so that's what I say. Izzy. Right, so that all I got in there was Bark because it started to move away. I'm not chasing it. People are always like, well, if you were going to get in right here, why don't you just get in here at a better price? Because if this goes like this, I feel like I got away with something. That's just my personal preference. So if it comes back up here, I'll put this back on. I mean, I'll put on the Lick and the Izzy. I only got the Bark on right now because I just didn't get a chance to get over there to put the other ones on. Speaking of which, let's turn on Tick Strike. No questions. I don't see any questions. You can put them in Discord, guys, if you are on there. Let's see what Hero is doing here. Brett should be on here in about 10 minutes. So here it was pulling back a little bit. So you can see this thing's basically moving, which is kind of surprising on a day like today. Like, you know, the big money usually comes in after the day after the Fed, but you can see the market is basically doing what the hero's doing today. So the options dealers looks like they're running the show. So this should be a good webinar with Brent when he starts to talk to about the what he sees with the new trace indicator. Anyway, you can see this. You can see this, and this is the one thing he talks about. We can ask him about it, but he says when the market you know, is sloping a certain way and you get this flow indicator, that means there's heavy options activity, and it usually signals a reversal. And that's exactly what happened here, right? He says as soon as it starts to level out, it'll reverse. So the white line is the market. This was the options flow. You got that flow alert, and for some reason it didn't ding for me. Anyway, there it is. So if you were just trading that blindly, you could have said, and this might be one of our trading strategies going forward too, where you get the flow, kind of like the TikTok, where you just literally just jump in the trade immediately. So that would have been a nice 20-point move right there. So we'll talk to them about it, but this stuff, it matters, right? These are options dealers that have to hedge with futures. So they are a big player in here. All right, so I didn't do anything with that, but I just wanted to show you guys because he is getting on here too, and it's very important information. Speaking of that, there's the trace. Again, I don't really know what I'm looking at here. He'll be on in a second to tell me. So it's starting to get back to this red. We'll find out on the delta pressure side. This 5,700 is an important area, and that you can see it on this right here. So I'm assuming we'll read his notes here too before he comes on. So at least I'm up to date on what he's talking about. That's right here. So this should hold. If this breaks, we could be getting a nice pullback. It's an already 20-point move. And again, I didn't take that short because I didn't get my qualifications for my ISI, but you took it. You had a nice trade going, and I would probably be getting out of some at this level. Let's take a quick look at what he had to say today. That is not today. Following up, we see agonies in a negative gamma stance, which implies upside volatility may remain. That's exactly what's going on. Today, risk assets are up big. SPY 1.6, Q 1%. This was early this morning, too, that he put this out. As per recent notes, SPX held over 5,600, albeit narrowly. Yeah, I mean, at the end of the day yesterday, I was short, and actually some of these Apex accounts were supposed to liquidate, and I came home and found out the thing was up like 50 points, so that wasn't cool. Still had short positions on. Anyway, we see a large bullish equity move this AM. Hey, that's a good call. Accordingly, 5750 is the big upside target, which is the JP Morgan collar for 930. 5750. Oh, well, that's interesting. That was a little below there. 57 quarter. Got close to. But note that. So SPX prices, they're different prices for the futures. Just look to the left, but you can get these cloud notes in the Bookmap to see the equivalent. The current positioning reads as very cheap. That's what it looked like happened earlier, and now call heavy OPEX looms on 920. That's Friday. This OPEX could create price consolidation. This huge rally, AM rally, confused the intraday action yesterday. We saw some pundits commenting that a lower equity vol was priced right. Equities were only down 30 basis points after the gas. We counted seven swings of 60 to 90 BPS yesterday. And that was only after the 2 p.m. We now see ES SPX plus 1.5% this morning. Our 1.5 rallies like to continue? Probably not, but we do see very little in the way of positive gamma up until 5750. So we'll have him talk about that. That's what he's talking about with the trace. This implies that at least of this AM, there were very few call sellers out there. This keeps dealers in a flat to negative gamma stance, which in the short term should keep volatility relatively high. And we see some decent volatility, right? You're seeing that almost a 7.5 ATR, 5-minute ATR, and yes, that's pretty high. You get a sense of this negative gamma via our new trace heat maps, which shows our new proprietary SPX dealer positioning. C of red reflects negative gamma, right? Actually, it doesn't have the label up there, but it's negative gamma. So that's this mode here. Still red, obviously sea of red. Again, it's going to be great to read this and then ask him direct questions. He'll be on here in like 5 minutes, hopefully. Sea reflects negative gamma. As you can see, it's only some end of the day local positive gamma. These areas being end of the day price targets. So he's talking about this stuff over here on the right. However, that positive gamma is only local in for today. Note after 4 p.m. the map is red, which tells us that it's only 0 day to expiration, offering some positive gamma. If there was material positive gamma, the map would be bright blue. So again, we'll ask him what that means. I'm not an options expert. I know a lot more about it after using this for about a year, but not the trades, but just listening to him. His webinars during the week are awesome. If you guys can get on those. Again, it's just a different take on the market. It's a very important take. These guys, these dealers are big players in the market. You want to, the S&P is the biggest options complex on the planet. What this tells us is that the traders are long SPX call and the dealers have buy stock when prices rise. So this is opposite of what I thought. I thought if it's red, that's bearish. So we'll see what he has to say. We think traders today are likely to start selling calls into this rally as strikes above 5750 to 5800, which should form some positive gamma going forward. That positive gamma would offer some stability to these new all-time high SPX prices. We also think traders are likely to close or roll some long positions into a very large 920 OPEX. Therefore, in a Friday and Monday, OPEX could lead to some stalling out of some of this vicious upside momentum. So keep that in mind. When he talks like this, it's very important, and he's usually right. There was one other sector of RI. So I hope he can get a trace for these other markets too. I'm sure he's going to be like one thing at a time, but like he's talking about bullish flows in gold, silver, and EDX. Let's see what gold looks like today. So gold is about to. This is interesting though, as far as we talk about the thesis with structure, right? So you had this that tried to break down, failed breakout, but more balance. This should be off the page based on that. When markets don't do something that they should be doing, the subsequent move the other way is usually a whopper. This is telling me watch out for a pullback, right? Because just think about it. This had its chance. Failed breakdown, built more balance, broke out this morning. Why? Why is it back here? Right? So again, I'm not doing anything with it. But if I start, say this market gets below here, and this would be a failed balance breakout of this guy, and I start getting volume events that are bearish, I'm going to trade double size shorts based on my thesis. That's all it is. I will trade both. If I got a long setup right here, I will go long. What I'm saying is when my thesis matches the volume events, then I fire. Right? So keep an eye on gold. And that might be it's not completely hasn't rejected this guy yet. So it's still bullish, but why didn't it go there? See, I mean, next time up at May, but I'm telling you, if this gets through here, I will be trading double size shorts. All right, you should be hopping in here in a minute. So one thing where that guy here, I'm on through. Actually, got to get my stops in. I never put my stops in here.
Hey Scott, how you doing?
Hey Brent.
Interesting market today, huh?
Yeah, some boring action. Let me let's get it down here for now. So I can hear. Sorry, guys, on the squawk channel in my room. I got it off for now. It's I'm talking over. Okay. You hear me?
Yes, sir.
Okay, cool. All right, so now we got to figure out how to let you show your screen. Dan, I think you said you were going to do something there. We just actually went over your AM notes. Very interesting. As far as your take, I told people when you talk like this, what did you say? Therefore, into Friday and Monday, OPEX can lead into some stalling out, some vicious upside momentum. I mean, that's not when you make like directional calls. You don't do it very often, like as far as direct statements. But when you do, they're usually right, is what I was trying to say. So, heads up for that. And we're, I was briefly talking about trades. Obviously, I have some access to it, and I'm just trying to understand, what you see or what this means, especially like in this gamma mode, sea of red, like you said. What does that mean?
Yeah, it was a weird couple of days today. Sorry, it's already been a long morning. it was a weird couple of days yesterday because we were talking about how volatile it was. I can't remember seeing that many, 0.5 to 1% moves in like an hour. I mean, it was 8 of them I counted, which is just wild. Right. And then this morning we just saw this big negative gamma environment, which tells us that volatility is still hanging around. And, obviously everyone's leaning on that to the upside, or at least this morning they were leaning on that to the upside. And then what's happened now, once the market's opened, is we saw a lot of 0DT call sellers come in. And what that does is that stalls that market momentum out. And this is the value of that trace tool, right? Because this morning we don't know that those 0DT people are going to do it, but then you could see them start to sell those calls in real time. And we can give an example of that or show you exactly how that flow played here in trace. Yeah. I'm sharing my screen here. Hopefully you guys can see it.
I don't see it. You guys see it? Again, a little help if you're on here. I think Dan was supposed to do something here. You can see it. You says because I see mine. So if you can see it, it looks like you're good, Brent. So let me turn off this tick strike too. It's pretty annoying right now. Okay, sorry about that.
All right. I love seeing some familiar faces in here too. Rainy days. What's up? All right. Sweet. Okay, so we've been talking about. I want to talk about August 2024, and the reason is because that environment really defined why you want to watch options flows, even if you don't trade options. And Scott, I think you are. You're obviously an incredible futures trader. You will tell people openly, I think, that you don't trade options at all and don't really know much about them. And I don't know how much you actually care about actually trading the options, but you want to watch the flows because it can drive the underlying. And so what was so interesting about August of 2024 is everyone knows August 5th and the VIX was over 65 and, everybody and their, mother and brother were talking about the market crash, but the conditions were already in place for that crash. Like the options market had set the table for the crash into the start of August. Specifically the Thursday and Friday before, kind of, excuse my language, but all heck broke loose on August 5th. So what's interesting is July 17th is what marked the high of the market. And July 17th was VIX expiration. And then we had options expiration and bam, the market really sold off a total of 8% from the July high to the August low, with obviously everyone paying attention to the 5th. But what is critical here, and I'm trying to relay to everybody, is that the market was in a really bad spot on August 1st and August 2nd before we ever got to the 5th. And if you knew the conditions were there for things to break on the 1st and 2nd, then when on Monday morning, everyone's sitting there, questioning what is going on with yen carry trades or what other kind of bizarre other links there are in the markets, you are in a much more powerful position to either buy dips or close, long puts or whatever it may be. Because the options market, had warned you and you knew that, it puts you in a much more powerful position. So how do we look at these things? The most basic way is what we call gamma by strike. And that's a complicated way of saying how big are call positions relative to put positions. So calls are in orange, puts are in blue. And when we get into areas where there's balance, that market tends to be very stable, meaning call positions are about the same size as puts. So this was on August 1st. So you could see that we're pretty equal across the board. But below 5,500 is where it's bigger net put positions. And that's an area where volatility can really start to increase. We call these zones, generally speaking, negative gamma positions. And negative gamma means dealers and market makers may start to really push the market directionally. What's also interesting and pertains more to this environment is this can work to the upside as well. There can be areas where there's more calls than puts. And that is also an area where dealers may have to start buying stock to jam the market. So under 5,500 is net puts. And what happens on August 1st? We wrote this in our founders note. We save all of our founders note. You can go back and read them all. We said August 1st, if we break 5,500, watch out because of this negative gamma environment in which market makers may have to sell stock. And sure enough, we broke 5,500 on the 1st and we traded all the way down to 5,400. Now, I generally don't make directional calls, as Scott told you, but I make a lot of if-then statements, right? If we break 5,500, then I think we're going to 5,400. And those are the if-then statements. Like yesterday with the Fed, who the heck knew which way that was going to break? But if we held 5,600, our view in our notes was like we're holding long above 5,600, and we're going to maintain that position. Just kind of forced to maintain that position based on our models, unless we break that level under 5,600. Then I'm out. But fortunately, market held 5,600, and there was a huge bounce this morning.
Right. Well, that day you did call the break of 5,500. That actually helped me stay in shorts. That was the trade of the day I put on Twitter too, because of your call, right? So a lot of times I'm getting out of the majority of the position, if it hits a certain area that I'm watching, 10, 20, 30 points. And I'm like, okay, well, Brent, again, when he talks like this, heads up. And I was able to hold a significant portion of that trade all the way down because of your call. So,
that's amazing.
The opposite activity, right?
That's amazing feedback. And Scott, I know you have an incredible set of tools that you use to watch watch the futures market, and you have a lot of really well-defined strategies. And what we find is that when you overlay this options framework on your existing strategies and you see those things synchronized, that tends to be where people find the most success, right? Because I'm not here to tell you like, do you short futures or do you buy puts or however it is you do. I'm here to tell you where there is support and resistance in the options market and where we see high volatility or low volatility environments. And then, it's up to you all as traders to figure out how you want to kind of express that. And I guess the expression of that is, obviously where Scott, you really excel. And so it's really cool to hear, when these things all line up.
It's just a whole nother layer of information that I didn't even know. I mean, I knew it existed, but I didn't know to what extent. And it's pretty amazing to see. What I tell my trade room and on my webinars all the time is, these options dealers are not the only game in town, but they are a major player. They're major players, and they have to hedge, right? They're not directionally taking trades like where you don't know what they have to do. That's why it's such incredible information. They have to hedge in the direction of these options positions.
Yeah, that's exactly right. And to your point, it is not always the most important flow, but it is always the most persistent flow, right? It's always occurring. And there are times where it is the market driver. Not always, not every day. And then, the other dynamic that we have to wrestle with now, which I'll touch on here, is zero DTE, which, is a crazy here 1 minute, gone the next minute market flow, which is, something that we didn't have to deal with a year ago.
Right.
So what this did, this August 1st move, set the stage for on August 2nd. Again, Scott says Brent rarely, I think I probably made a statement like this maybe 2, maybe 3 times in the 4 or 5 years I've been writing daily notes. And I said on August 2nd at 7 in the morning before the market opened, I said, we see no reason to hold stocks and be short vol, and this is a nasty setup. And this was the combination of having a lot of negative gamma in the market and also a high volatility, high implied volatility, i.e. the VIX was, percolating, I like to say. And this was on Friday morning, August 2nd. This was before anyone was talking about carry trades or, the end of days or whatever else was going on, right? This was the morning of Friday, August 2nd. And, it just so happened when we set the table for risk that, whatever it was, the yen carry trade or something else triggered. And what drove the VIX to a 65 print and made futures drop another 200 points or whatever it was on Monday morning was the options market had already set the stage to drive volatility and make these extremes. And if you were aware of that, again, in position for that, August 5th was a whole different day for you, right? You were probably really excited about the crash if you were short futures.
Right.
So what happened then on August 5th, and this is where the Trace map comes in, and we're going to talk about Trace, and this is this incredible tool we're launching on Tuesday, and Scott has a link we can share for that. But what you see in Trace here is the negative gamma environment on August 5th. Obviously, this tells us that dealers have to buy stocks as the market's rallying, sell stocks as the market starts to decline, and that drives volatility, right? You have this big player that's forcing the market directionally. And so the market opened at 51.20 and we ripped. And what you see here is this big map of red, which is negative gamma. And then if you look at here, there's this weird pocket of blue, right? This pocket of blue, which disappears after 4 o'clock, this pocket of blue is dealer long gamma positions. And those are gone after 4 o'clock, which tells us it's just zero DTE. So when you look at the individual strike positions, we know dealers are long these positions, which turn out to be short puts. And then we can see some call buying from 0DT traders as well here. And so the idea is that we see 0DT positions that come in the market that are offering stability to the market at these lows of 51.20. And what that's telling us is that, hey, people are buying this dip, right? The short dated traders are buying this dip. And that is a signal of a quick rally. So how do you see that it's 0DTE? Well, on this, in the boxes here on the left, you see that, oops, sorry, I just lost my mouse. I can't highlight for some reason at the moment. All right. On the left box in red, you see there are a bunch of strikes, right? There's a bunch of blue bars and some red bars, and that's short puts and long calls for 0DTE traders. And then what you see on the right side is there's that red box where the positions are gone. So what does that tell us? Well, if you replay the trace map, and what you can actually do in traces, you can go back over several months and replay intraday what happened. You see that people at the top, they closed all their positions. So what is that? Hey, I'm long 0DT calls. Oh, market's rallied 100 handles. I'm closing that out. And bam, the market sells all the way off, and we end up down right back at 51.50, which ties with this big blue blob that you see on your screen, right? And so what that is essentially is there was one huge 0DT position left in the market, which is that blue bar kind of on the right side. And that's where the market closed. So 0DT rallied the market. Those positions get closed at the high, market fades. And you see this happen time and time again now in these 0DTE driven markets. And even though I write a lot about what positioning is at the start of day, there's no way to tell what 0DT people are going to do, right? They could buy the market, they could sell the market, they could do whatever. And then what they did today at 10 o'clock could be totally changed by 10:30. It's this huge flow that is here this minute, gone the next minute. And that highlights the value of Trace and also of our trading tool called Hero, because you see all this happen updated continuously throughout the day. Hero being real-time, Trace updating about every 10 minutes. When we zoom back out, we talk about these ideas of positive and negative gamma dynamics. And it's interesting in relation today in this 5,700 level, because back then on August 6th, we said, look, we have to recover 53.15 to have stability in the market. And the way that I framed this was no man's land is this area where I don't have an edge, but I don't want to be long, or I don't want to be neutral. Like I'm day trading, or I'm trying to scalp positions maybe. But, you know, do I want to hold a core long position in my portfolio where I just kind of like buy and then, you know, wait a couple days to see what happens? I did not want to do that unless we covered 53.15, because that's where positive gamma is, above 5,300, and that tells you that there's market stability. And you check that versus we said, look, if we break 5,200, then things get really sloppy, right? That 5,200 on August 6th was the same as 5,500 back in this example. So what you end up getting here is, but just fast forward a little bit, you can see what happens is over the course of the next several days. Let me see if I can just get my mouse back. What you see is over the course of the next several days is we rally to 53.15. This is on the 7th. We reject. We open at 53.15. We reject. And then finally, after August 8th, we recover that 53.15 level. That's where that positive gamma flow comes in. And then the market had a really long, stable rally, right? That lasted for several days. And so, you know, we have all of we have this instability in this no man's land zone. And we're kind of looking at 5,700 as that level right now, where it's kind of no man's land. And we're getting a little nervous below that level, suggesting that rally's not so stable, right? If we can't keep 5,700. So if you look at these trace maps on August 6th, you can see what happens. The market rallies here. There's big 0DT positions. Again, there's a theme here. And then those 0DT positions get closed and the market fades. And it happens right at this 5,300 level, which makes you kind of wonder, you know, okay, we're talking about 53.15 from a longer term perspective. There's clearly people hedging to those strikes using 0DT options. And you see that flow come in, and then that flow goes away and the market fades, right? You could see that again. This was August 7th. So here's the 6th, right? We didn't get to 53.15. There was no stability, gave it all back. This is the 7th. We test that 53.15 level, and then what happens? This is all negative gamma, right? This tells me that if the market starts to directionally move, that direction is going to continue. And sure enough, we give it all back, only to land at what the only positive gamma position is. You see these blue bars? This is where people started selling puts. So that support area comes in where people sell puts because dealers are going to buy in that zone, right? So positive gamma is support and resistance. Negative gamma is directionally big moves. Lastly, but not least, this is the final August 8th level. We got above 53.15. We recovered that area on the close. There's a little bit of positive gamma in here, as you can see. This blue zone, and that finally told us, okay, there's some stability here in the market, and that stability is driven by, hey, if the market starts to sell off, rather than dealers being sellers as they are here, then they can start to buy a little bit in this zone. This is the same map, right? This is the gamma map. It's all red here. But on this day, on 53, on the 8th, when we open above 5,300, now you're seeing that blue positive gamma, which is some support. You see that come in on the 8th. So just to, now that we've covered some examples here, many of you are familiar with me, I believe, just by recognizing some of the names here. For those of you who are not, there's a lot more people that don't know who I am that know who I am. My name is Brent Kochuba. I founded Spot Gamma in January of 2020. I have about 20 years of institutional derivative experience at various banks and a market maker called Wolverine. And then I worked for a family office where I modeled S&P options. And so it is there through that S&P 500 modeling that I came to understand the link between the stock market and the options market and how the options market could drive price. And I realized that if that could happen in the S&P, which is this giant $1 trillion index, then it probably worked in single stocks as well. And so I built these models out, and those models are the foundation of Spot Gamma, which again was launched in January of 2020. The funny thing was, back then, it was about trying to convince people that options flows did impact the market, the stock market. That is something that's kind of taken for granted by a lot of people now after meme mania and the growth of options. And so we're really focused here on training people or showing people where and when these options flows matter, and building, incredible new tools like Trace to help people see this stuff happen in real time. So let's talk about the practice of what we call positional analysis. Positional analysis is looking at big trading entities and forecasting where their buying and selling flows will move market prices. Obviously, with options hedgers, they're some of the biggest traders around. As Scott mentioned before, these are the guys that are buying and selling all day long, every day, because that's what they got to do to maintain their hedges. It's different from a big fund that is, got to get a position on, and they buy a bunch of stock now, and then they don't do anything for 6 months. And you compare that to technical analysis, support lines and Fibonacci's and things, or fundamental analysis, which is, Tesla bought more cars than people think, or Tesla's selling more cars than people think, and I don't think they're gamma hedging with cars, but never know, I guess. So that's what the difference is here. So positional analysis is the term we coined to explain what it is we do. Let's talk about the size of the options market. This is from the NASDAQ. This is options average daily volume. And as you can see, it has exploded in recent years as commission-free trading has picked up, as electronic trading, you could trade from your Robinhood app on your phone. And the recent years have been zero DTE, or next expiration flow. You can see that as about half of the volume right now in the options market, which is just absolutely crazy because, that is all new volume, right? It's not that we saw other volumes go to zero. We just see more and more and more options trading. So with that, about 45 or 50% of the S&P flow is zero DTE, meaning expires today. And about half of the major names, NVIDIA, Tesla, etc., half of their volumes are focused on next expiration flow. So whatever the next Friday is. I would also add that there is scuttlebutt that there's going to be zero DTE single stock volumes. And so this matters to everybody here because these zero DTE flows are very large and very real, and they move the market on an interim basis. And so if you're not watching these flows and seeing how these positions are shifting in real time, we think you are at a significant disadvantage. Because if you don't know it's the zero DTE moving the market, then you're searching for some news or some other type of thing happening, and that leaves you in an unknown space, right? And that's not great when you are a trader. And so, I think what's critical about this is that this information, this options flows matter not just for options traders. Obviously, everyone here is a futures trader, so you guys all and gals all kind of understand it, right? you get the idea that, hey, these options flows matter to the underlying. We have a lot of people go, hey, I don't trade options, so why should I care? But if you're trading stock, you're trading spiders, if you're, watching futures market, this stuff matters to you. And I would also add, the Bookmap community is amazing. And there's a lot of these iceberg, signals and different things like that really line up with the options flows. And so you go, what is that iceberg? Scott could talk to us better than I could. You go, what is that huge offer sitting there? And you go, oh, that's a gamma strike. Oh, I kind of understand what these guys are doing now. So how does all this actually work? When you trade an option, whether you trade through E-Trade or public or whatever it is, you put an order in, I'm going to buy a spider call. 90% of the time, it is a options market maker that's on the other side of that order. Okay, so that means it's a Citadel or a Wolverine. Those are the big options markers. They're the ones selling you that contract. Now, if I'm trading just one small order, that doesn't really matter to them. They just say, hey, no big deal. I don't have to hedge this. I don't care. But if you have a bunch of traders getting together and buying a bunch of positions, that can add up to be material risk. So in this example, we say, look, all these individual traders bought a bunch of small positions, and that suddenly adds up to be, in this example, 100,000 AMC calls. Well, just to give you an idea how big this can be, if you monitor how big the hedge could be on 100,000 AMC calls, it could be 2, 3, 4 million shares of stock that have to get bought in AMC to hedge out this position. And oftentimes the market makers aren't in the position where they're like, hey, I'm going to take my time and work this order over the day, right? No, they got to hedge that risk. It's an active trade that they have to put on, and that hedging is what drives the underlying stock. So this chart here describes delta. Delta is, again, the secret to market maker hedging, because the way that you hedge the risk of the underlying stock moving when you have a big options portfolio is you buy or sell shares of the stock. So in this case here, what we're showing in blue is a measure of delta. In red is a measure of delta. And what we're just basically saying is, as the stock price goes up, the delta is changing. What does that mean? That means the number of shares that I have to own as a market maker changes as well. So if the stock goes up in that example, I have to buy more shares. If the stock goes down, I got to sell shares. And I'm continuously doing this all day long, every day. And it's those changes and flows, right? What is it, those changes and flows that is moving directionally the price. So traders come in, they buy options, the dealers buy or sell stock, and that is what exerts the directional pressure on the underlying market. Now, a few trades don't matter, but big trades matter, and we are in the business here of Spot Gamma of telling you, hey, this is the size that matters, right? This is the time and the place you need to watch. Right now, we're facing down a triple witching massive options expiration tomorrow. And so right now, these flows are really big and really meaningful. How do we describe changes to the delta flow? Well, there's two prominent ways. The first is gamma. And what all gamma is telling us, it's the green line. So red is the delta curve, right? We just saw. How is this curve changing? We describe that with gamma. So all gamma is telling us is that at this moment in time, if I have 50 shares of stock to hedge my position, if the stock goes up $1, I got to buy 5 more shares. That 5 shares, that calculation is what we call gamma. And so much of what we focus on here is gamma, because gamma is telling us how many incremental shares of stock have to be bought or sold for a given underlying move. And so negative gamma, positive gamma, all those are just ways of describing how much stock has to get bought or sold to maintain a hedge. Why does this matter? This is our gamma index. We published this at 2 in the morning. And then what we did is say, okay, for every gamma index, what is stock action like the next day? What you see is that when we have positive gamma in the market, we have very tight trading ranges. This is the forward one-day S&P change. You can see we tend to have very little movement, right? Versus a negative gamma environment, we have big moves. And so if you know this as a futures trader, you can go, look, we got positive gamma today. I'm just going to try to get 10 handles. That's what I'm going for. Versus, it's a negative gamma environment. I'm going to look for 50 handles, right? Because there's much more volatility in the market. The second way that we describe the way that changes happen is with charm. Many of you probably heard this term before and say, I don't know why it matters to me. The reason is because of the proliferation of zero DT options. To give an example of how this works, this is a sample of delta for call options. So how many shares of stock do I have to own? You could think of this, right? 20 shares, 40 shares, 60, etc. With 1 month to expiration, that's what the blue line is. And if you don't change the underlying price of the stock, let's say you just pin the stock at 100, and you just move time forward, what you see is that the delta of an options changes. So if I had, let's say, 90 shares that I had as a market maker right here, as time changes, after we move with just a week left to expiration and then a day to expiration, you can see I go from having to have 90 shares to nearly 100 shares, right? Just as a function of time passing. And so what that tells us is that when there's these big options positions, if the underlying isn't really doing much, if the position's big enough, that in and of itself is going to move the market, right? And what's also interesting about this is that if you accelerate this and you say, hey, how does this delta change from like for a 0 DTE from like 12 o'clock to like 3:30, it's huge. It swings all over the place. And so that tells us that these 0 DT positions, as they're going into and out of value, can drive giant amounts of hedging flow. And those hedging flows can really move that underlying. So this was a quick representation of delta, gamma, and charm, why those matter. If any of these were kind of tricky or caught you off guard, you can go to YouTube, look up Spot Gamma, Gamma 101. We walk through gamma in a very sort of calm manner. But what Trace is showing you in real time, this is our new Trace tool. Again, it launches on the 24th. That's Tuesday. You're seeing delta, gamma, and charm maps updated continuously throughout the day, and they update as positions change in the S&P 500. So all this means is that even if you don't really understand these terms I just talked about or don't fully have it grasped, we all understand red bad, blue good, right? Blue supportive, red volatility, charm, blue supportive, right? Red bad. And that lines up to be very simply support and resistance and volatility, right? Support and resistance, and how much is the market set to move, a lot or a little. So let's give you a couple of examples here of how this price action works. We focused a lot about 0 DTE. One of the biggest trades that comes into the market now is this condor seller. And what that person is doing is making a bet that the market is going to stay within a range. So you see this position here, and we can see that dealers have on this position, right? Because some big fund puts this on. And the bet is that the market is going to stay between this range. This is on August 26th. We saw this trader come back in last week, actually earlier this week, excuse me. And so what you see is that the market opens at 56.60 where this big position is. And then it rejects and it sells all the way down to the bottom area of this position. And what do you notice about this position is that, well, look, now it's worth nothing at 2 o'clock in the afternoon because the value has decayed away. And so the bottom side, the bottom strike is all that matters. And that actually is where the market finds support. And so if you don't know that this position exists because you don't track the options market, then you're at a loss of understanding why the market is moving fluidly between these two zones, right? Because on this particular day, there's no big news, there's nothing significant happening, but you have these positions which literally can be millions of dollars of P&L for some market maker or some hedge fund into the close, right? Because if this position expires in the money or out of the money, that can swing literally millions of dollars of P&L for some entity or entities. And so that individual or that firm is what is dictating market movement as we get into the close oftentimes, because they're trying to hedge out this position, which expires at 4 o'clock, right? So for the next couple of hours, this is the thing that matters most to a specific individual. This is September 11th. I know Scott, he's had beta access to this, so I believe he was able to see this play out in real time. But we talked about red being bad, blue being good. This is our delta map. And what you see here on September 11th, which is this giant market movement, is you see red here, right? And then you see red is selling pressure, and then blue is buying pressure. And so when we hit 5,400, where these giant strikes are, you see all of a sudden this map flashes bright blue, intensely blue, and bam, market rips. See that? And you see the market rip. Why does the map suddenly turn bright blue? Because people closed or added a bunch of positions. The positions changed. And so you can see that in real time where you're going, I think I need to buy 5,400 because that was the level outlined in the founder's note. I want some extra confirmation. Well, when that map turns giantly bright blue, you go, oh, okay, they got to buy. They being the dealers got a lot of stock they need to buy. And this red zone also goes away, as you can see, indicating that selling pressure really gets mitigated. So I know this was a lot to cover, and thank you all for sticking with me through this. But we believe that these options flows are pivotal to futures traders. And so we covered the significance of the influence of zero DTE trading, the idea of positional analysis. Hopefully you all at least have a grasp now on how these hedging flows work and how options flows make their way into the underlying market itself. And now you're able to sort of understand why monitoring these flows are so important. With that, we are launching Trace on September 24th. It is a tool that we have spent, like I said, we started tracking positions in January. We have spent a lot of resources, engineering time, invested a ton of money into building this tool. And I'm most excited about this. I'm more excited about this than I was when we launched Hero, which I thought was really groundbreaking a couple of years ago. We are going to be doing a presentation on the 24th. Along with that, we're doing giveaways. We're doing a lot more education. We're going to be offering live chat support for next week for people as they get their feet wet with this tool and all of Spot Gamma's offerings. Scott, I'm not sure how to share this link with your room. Scott has a link that I want to share with everybody. We post it.
Yeah, I put it in there.
Okay, cool. So please grab Scott's link and do that now to register today and now, because we're going to be offering a bunch of case studies and insights, and I think we're offering a free preview of the tool, which means if you're part of the email, if you're on the email list, you'll get a free preview of the tool before the 24th. I think that's working. Spot Gamma people, if you're listening to me, don't get mad at me that I said that, but I think that's the deal. If not, I apologize. But we're definitely offering some free previews later on in the week. So again, please join us for this. We want to make sure that you see how these options flows are moving the market. Proof is in the pudding, right? So when you turn this on, you're going to see in real time how all this stuff works, and you'll figure out very quickly when and how this tool works for you. And let's just talk about today if we can, Scott. It's been a funny market. Say that again.
Do you want to go? You got like 2 minutes. Sorry, I should have let you know the ending time because they got another Bookmap presenter coming
I'm over
on.
time. Okay. All right. Here's what Trace Map is showing us.
I really had a bunch of questions for you, but that's all right. I mean, you went over the basics, and you're going to be going over next Tuesday as well. So that's my fault. I should have let you know. You only had a half hour.
No. My fault at all. I'll be super quick. I just want to show people what's going on right now. There is positive gamma in the market. This is support. And you can see these blue bars right here. That's support for the market. And we are supported as long as we hold 5,700. That is true up to the minute information. So we hold 5,700. I personally am staying long. I'm just letting it ride and hoping we stay above that level. What I want to show is this delta pressure map. This is telling me, this blue zone is telling me that dealers have to buy if we start to dip below here. And this has been the way it works all day. And what you can sort of target is this white zone, which also lines up with some big option strikes. So this 57.35, 57.40 is the area that I'm watching for the end of day today. If we lose 5,700, then I'm stopped out on that view, but I think we can have a pretty decent run into tomorrow. And then tomorrow obviously is a very significant day with options expiration. So that's what we're seeing right here, right now. Sorry everybody for running a little bit over. Again, please join us with Scott's link so that you can all get access to Trace and join us on the webinar, which we're very excited about for Tuesday. All right, that's what I got. Thank you, Scott. Thank you for everyone for listening to me
awesome.
Go on about the presentation today, and we'll all be seeing you soon.
Great info. Can't wait to be using this in my trading, like you said, with the stuff I'm already using. It. I mean, talk about an edge. It's like I'm more excited than you are, if that's possible. So
that gets me even more excited. So we'll keep one up with each other.
Awesome. Well, thanks for hopping on, and look forward to Tuesday's webinar again. And then, guys, I got to hop off, but this crew trade's working. I'm just trailing my stop for this most recent event, and I'm still long NASDAQ. So put on these 2 trades during the webinar. Hopefully, the webinars aren't to mirror my trades, but understand what I'm doing. I do this every day in my trade room. Come on over, and you will learn how to trade this stuff. And then we're going to learn from the option stuff, too. Very exciting. All right. You guys have a good weekend, and I'll see you next Thursday. I appreciate it. Thanks.